From our perspective, BlackRock's leadership appears to be completely disconnected from reality. This is truly frightening given how much money it is managing. Seeing Germany as an example for other countries to follow for their energy policies is either extremely ignorant or extremely evil. Most would argue it's the latter. Whatever the case, the result is the same. The rich get richer and the poor get poorer. This is often what happens in a centrally planned economy. And therein lies BlackRock's biggest error. The asset manager believes that the only way to provide solutions to problems and to create prosperity is centralized control to the point that it needs to partner with governments, roll out stuff like CBDCs, and restrict access to gold in the name of economic growth.
Guy Turner, a renowned cryptocurrency analyst, recently exposed BlackRock CEO Larry Fink and the suspicious plans behind his annual letter to investors. Turner revealed that Fink has made some concerning statements about retirement and future investments. According to Turner, Fink claims that as life expectancy increases, people won't be able to afford retirement, suggesting that entrusting BlackRock with their money is the solution. Turner noted that BlackRock is making significant investments in India, likely due to the country's growing population. Fink is advocating for delayed retirements and urging employees to invest in capital markets. Additionally, Turner disclosed that Fink has a troubling idea. He wants to regulate how individuals use their retirement funds. Turner also highlighted that Fink supports funding infrastructure projects through public-private partnerships, which would give BlackRock control over retirement fund spending. Turner warned that this approach is dangerous and could lead to a revolution in retirement, but not in a positive way.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Now, in the third part of his letter, Larry asks how people can afford to retire given how much longer they're living. By now, you'll know the answer is to give all your money to BlackRock. Case in point, Larry notes a joint venture BlackRock has with an Indian retirement firm that invests in digital infrastructure. In other words, you will own nothing and be happy, and your retirement savings and investments will be used by BlackRock to make it happen. Speaking of which, it appears that BlackRock is making big bets on India, presumably because its population will be one of the last to peak sometime in 2050. Take note. Funnily enough, Larry then suddenly pivots to talking about the US, presumably because the reader may start wondering just how involved BlackRock is getting in India. Ironically, Larry admits that the financial struggles of younger generations are because of policies introduced by boomers like himself. As you might have guessed, BlackRock once again has the solution to save the next generation. After underscoring the fact that America's social security system will run out of funding by 2034 and advocating for later retirements, Larry says that there are 3 ways to fix our future finances. The first is to effectively force workers to use a portion of their paychecks to invest in capital markets via asset managers like BlackRock. Fancy that. Larry reveals that a similar law will go into effect next year in the US, requiring all employers with 401k plans to automatically enroll new employees, a slippery slope. This relates to the second way that BlackRock plans to fix our future finances, and that's to control how we spend our retirement savings. Put simply, BlackRock wants you to not only give them money, but also wants the power to tell you how you can spend this money during your retirement. I'll note that this is a very real risk that's been raised by many macro analysts, notably Mike Green. Now, if that wasn't scary enough, Larry refers to this as a, quote, revolution in retirement. It goes without saying that this revolution is more like the Russian kind than the French kind. To add insult to injury, Larry believes that BlackRock's plan will create hope instead of fear. Are you feeling hopeful yet? But wait, there's more. Earlier in his letter, Larry implied that the third way to fix our financial future is to fix the demographic problem. That is, have more kids, or at least increase immigration. But no, all Larry actually said was what I just mentioned a few moments ago. Raise the retirement age, and hey, that'll do it. This might have something to do with the fact that Larry believes machines can replace humans. This is literally what he said during a recent discussion panel hosted by none other than the World Economic Forum. In the fourth part of his letter, Larry expands on the ESG-compliant infrastructure BlackRock wants to build with your retirement money. He begins with a proclamation. The future of infrastructure is public-private partnership, or rather, BlackRock working with your government. Larry argues that this public-private partnership is the only way to fund infrastructure spending because governments just have too much debt to do it alone. He highlights the fact that the US government's debt burden is growing fast and that fewer and fewer governments are buying US government debt. I'll quickly note that a shortage of funding was exactly why the precursors to the SDGs, the Millennium Development Goals or MDGs, ultimately failed.
Guy Turner is raising alarms about Larry Fink's ideas and the potential consequences of giving BlackRock and other financial managers too much power. He highlights that Fink envisions significant opportunities in both public and private sectors, suggesting a market rebound, which contradicts Fink's earlier warnings about investor risks. Turner also notes BlackRock's focus on increasing the use of ETFs, including spot Bitcoin ETFs, and investing in ESG infrastructure and fixed income, implying that long-term average interest rates will persist. Turner points to BlackRock's acquisition of GIP, an ESG infrastructure company, and Fink's appointment to its board as part of this strategy. Fink boasts about BlackRock's share performance as a global success story benefiting the common person. However, Turner argues that since the top 10% of earners hold nearly 93% of all equities, this success story primarily benefits the wealthy. He criticizes BlackRock's leadership for being out of touch with reality, given the vast sums of money they manage, and for using centralized control, government alliances, and gold access restrictions to promote prosperity, which Turner likens to sustaining a financial Ponzi scheme. Turner is particularly unsettled by BlackRock's strategy of transferring money to global debtors, allowing them to decide its use, especially as Fink shifts focus to investments in impoverished nations. He views this approach as troubling and cautions that it could lead to negative outcomes, suggesting that BlackRock's leadership is more concerned with maintaining control than genuinely solving financial issues.
Here is where things get really interesting. Seemingly out of the blue, Larry notes that, quote, as we look ahead, the re-risking of client portfolios will create tremendous prospects for both our public and private markets franchises. This is interesting because Larry noted in 2023 that investors were de-risking. Logically, this suggests that BlackRock believes that the markets will go up this year, since re-risking likely means moving from bonds into stocks. So far, this prediction has been on point, yet again. I suppose that's to be expected given that BlackRock can advise the companies it's invested in on how to beat estimates. And this ties into what BlackRock plans to do with the companies it can influence via its voting shares. As expected, Larry is rather vague about this, hinting that BlackRock will keep doing what it's doing, pushing ESG. Larry reveals that BlackRock will continue to be focused on ESG infrastructure. On the ETF side, they will continue expanding ETF adoption and introducing new ETFs, noting the spot Bitcoin ETFs. This is significant as it foreshadows additional crypto ETFs, like those for Ethereum, for instance. Larry also notes that BlackRock will be increasingly focused on fixed income, aka government bonds, now that interest rates are, quote, near long-term averages. This is significant as it suggests that BlackRock believes that interest rates will stay where they are, a contrarian take for those expecting rate cuts. After bragging about the fact that BlackRock's stock has gone up by 90x over the last 25 years, the same returns that many meme coins see in a few weeks, Larry notes that BlackRock acquired GIP, the aforementioned ESG infrastructure firm, and that its CEO, Larry's buddy, will join BlackRock's board. Who needs crony capitalism when you've got nepotism disguised as ESG, eh? Anyway, jokes aside, Larry wraps things up by claiming that BlackRock is one small part of a global success story. A success story that Larry believes is lifting the average person, but in fact is only really benefiting the upper class. Regardless, Larry says it's all possible because of the capital markets and the people who invest in them. He doesn't say that over 93% of all stocks are owned by the top 10% of people. Oops. So this brings me to the big question, and that's what all this means for you and for the markets. Make no mistake, these are two very different things. From our perspective, BlackRock's leadership appears to be completely disconnected from reality. This is truly frightening given how much money it is managing. Seeing Germany as an example for other countries to follow for their energy policies is either extremely ignorant or extremely evil. Most would argue it's the latter. Whatever the case, the result is the same. The rich get richer and the poor get poorer. This is often what happens in a centrally planned economy. And therein lies BlackRock's biggest error. The asset manager believes that the only way to provide solutions to problems and to create prosperity is centralized control to the point that it needs to partner with governments, roll out stuff like CBDCs, and restrict access to gold in the name of economic growth. This doesn't sound like something you would do to solve problems and create prosperity. It sounds like something you would do to prevent a financial Ponzi scheme from falling apart. For all of their faults, governments only have a fraction of the debt that banks and asset managers do. According to a recent report, the world is $315 trillion in debt, but the derivatives debts of banks and asset managers are estimated to be in the quadrillions. These derivatives are backed by other assets whose value must rise. Otherwise, the derivatives debt bubble will burst and, well, game over. When you step back and look at what BlackRock is proposing, it all involves the same thing. Give us your money and let us decide what to do with it, including when we give it back to you. It's very possible that ESG is just an excuse to trick people into thinking they'll save the world by giving BlackRock their cash. This all makes BlackRock's new approach that much more frightening, because it seems that Larry has tricked everyone he can in the US and is now turning his attention overseas. Unfortunately, many countries are desperate for investment.
In a recent turn of events, the markets were jolted by news about Trump's opponent following last weekend's failed assassination attempt. However, President Joe Biden has now announced he is ending his 2024 presidential campaign, stating that it is in the best interest of his party and the country. This decision comes just days after it was revealed that the president had contracted COVID-19, raising concerns about his age-related health issues. Biden's statement reads, "While I have intended to seek re-election, I believe it is in the best interest of my party and the country for me to stand down and to focus solely on fulfilling the duties as president for the remainder of my term." This announcement follows a difficult debate with Donald Trump last month, after which several prominent Democrats urged him to step down from the race. Biden's decision has impacted the cryptocurrency markets, with Bitcoin's price dropping by about $2,000 in minutes, though it quickly recovered most of its losses and is currently hovering around $66,700. What are your thoughts on Guy Turner's analysis of Larry Fink's plans and BlackRock's influence? Do you believe Turner's concerns about the potential risks of these strategies are justified? Please share your thoughts in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.